Stock is soaring. I am bullish on Disney stock. This is StockerFinance. I'm your host, David Scheuer, twitter.com/StockerFinance. For more information, patreon.com/StockerFinance to support the show. Now, Disney stock is currently up around 14%. It actually went as high as 15% today. Pretty incredible increase in this company. The market cap passed over $300 billion, is currently $317.96 billion. That may have fluctuated a little bit since I made this video. A 52-week high of $179.45, which it hit today. 52-week low of $79.07. So an incredible rebound of Disney. That's largely due to Disney Plus. Now, Disney Plus recently reported that it hit 86 million subscribers, and it did that in a little over 1 year. That's incredible, because if we look at Netflix streaming memberships, it has about 195 million. And if we compare the two and how the rate of growth is comparing the two, well, Disney is set, if it continues on this rate of growth, to surpass Netflix in subscribers in not too long. Keep in mind that Netflix is over a $200 billion company. And if we compare that to Disney, well, Disney also has all this other stuff. Investors are pricing in the fact that Disney's parks are going to open soon, fully open soon, that also, you have all the merch, all the Lego sales, all the different things associated with the movies and shows. They release a ton of new content, original content for Disney Plus, especially a ton of Star Wars content, which I am a big fan of, and that's also going to drive more consumers to go to the Disney park, especially that Star Wars section that they recently built a couple of years ago, which is going to be pretty incredible. So Disney's really soaring, doing an excellent job promoting Disney Plus. On top of that, again, they hit 86 million subscribers in a little over 1 year, but on top of that, they're actually going to increase the prices in early 2021, and 86 million, that's just Disney Plus. Keep in mind, they have Hulu, and they have ESPN as well. So if we just go ahead and they have a bunch of different packages with that. But anyways, I get into that a little more later. But anyways, they eyed up to 260 million subscribers by the end of 2024. So they expect 260 million total subscribers by the end of 2024. That's pretty incredible. Now, if we keep moving on here, they announced price hikes. So as of March 26, 2021, Disney Plus pricing in the U.S. will increase to $7.99 per month. That's up from $1 from $6.99 now, or $79.99 per year versus $69.99 now. The three-way bundle with Disney Plus, Hulu, and with ads, and ESPN Plus, I was kind of talking about, is increasing to $13.99 a month, also up $1. Just a small price increase. Obviously, as a consumer of Disney Plus, I'm not the most thrilled about this, but the genius behind Disney and Disney Plus and their streaming platforms is the fact that they got everyone hooked on the show. They released a ton of new content. Everyone's excited. And then they say, you know what? Let's increase the price $1, just so that the cost of all these original shows gets more balanced out, that we're not spending a ton of money like Netflix is. Netflix spends millions of dollars on their content. But Disney has so many more revenue streams for their content that I think they're going to be much more wildly successful than Netflix with their streaming platform. And I think we're already seeing that in terms of how many subscribers they're gaining. And eventually, I think the profitability of Disney Plus in the future. Now, here's the genius of Disney's streaming segment. They did the full circle of profitability. Let's say they produce a movie, and I'm going to specifically apply this to big, blockbuster movies that Disney produces. So they produce a movie, then they go ahead and release the movie out to all the theaters. It usually becomes profitable just from being in the theaters. So they already have a movie that is paid for, or at least they broke even from the theaters and the box office sales, or at least even if they broke even, they may have made a significant profit on that movie, and then they go ahead and plaster the MP4 of that movie onto their streaming site, which people are paying, $8 a month for, or they're paying a yearly subscription for. Then they go ahead, and if it's a really popular movie, which by that time it usually is, most Disney movies become very, very popular, very big. We've seen that with Star Wars, all the Marvel movies, Frozen, etc. Tons of different, really cult following behind a lot of Disney's films, TV shows, etc. Well, then they go ahead and sell merch, toys, video games, etc. They could link to all that directly on the Disney Plus site. Let's say you want a baby Yoda stuffed animal or something like that. You want to give that to your kid for Christmas. You can go ahead and just swipe up on the Disney Plus. And I'm saying they don't have this right now, but I'm hoping they add this to the Disney Plus website. You can just swipe up, order it right there from the Disney merch store. Boom. That's an extra profit puppy for Disney. So the chance of profitability for movie and media creation increases dramatically because of this genius design that Disney's created with their streaming segment, this full movie circle. And yes, they have lots of originals coming to Disney Plus. This recently saw with all the Star Wars content. and some others as well. But raising prices will help pay for the cost of those originals. So Disney also sells merch such video games, which help pay for the cost and balance out the cost of those originals. It also see an increase of people going to parks that associate with the popular TV shows / movies. At Disney World, you get the huge Star Wars park. I would suspect, or I would make an assumption, that that's going to see an increase of people going there after The Mandalorian's wild success, as well as these other Star Wars shows coming out that I'm very excited for as a Star Wars fan myself. Now, is Disney stock overvalued? I mean, it shot up 15% today. That's a lot for a big company like this. You rarely see that type of volatility with companies like Disney, especially in their stock, or with the stock of Disney. Sorry, I misspoke a little bit right there. But I don't believe so personally. And this is just my opinion as entertainment only. Don't take this as investment advice. But investors are pricing in the facts that parks, theaters, etc. are all going to reopen. So that's already being priced in to the stock. And they're just adding in the fact that Disney's having this wild success with Disney Plus. So Disney Plus is also priced based on geographic location. And what I mean by that is in India, the pricing for Disney Plus is significantly less than that in the United States. And because they are able to differentiate the prices based on geographic location, based on the incomes in those locations, they can go ahead and get a lot more subscribers, which is a really great strategy by Disney. On top of that, ESPN, Disney Plus, and Hulu, I mean, Disney is just becoming a streaming giant. Now, there's some risks associated with Disney stock. Let's say the vaccine doesn't come out. That would be a huge hit to the company because theaters wouldn't open, the parks wouldn't open. And so that first part of investors pricing in the fact that parks, theaters are going to reopen, well, that priced in would completely go away. So that is something that is a small risk, although it doesn't seem like it is going that way. I think that's a very small risk at this point. We're seeing a lot of progress with the vaccines coming out, a lot of progress in terms of reopening as well throughout the world, not just in the U.S. I would say majority of reopening. I know Australia is basically fully reopened at this point. China's pretty much fully reopened. Japan's going really well as well. A lot of Disney fans, and that's a huge market for Disney over there. National shutdown again, if that happens, I don't believe that's going to happen, but if it does, that would also hurt Disney stock. Competitors try to undercut Disney, extremely unlikely. It's more likely that Disney is going to continue to undercut all of its competitors, etc. There might be a few more risks as well associated with this investment, but not too many. Now, if we go ahead and look at Netflix stock, it's worth $221.38 billion as of the last time I checked. That may have switched a little bit with a 52-week high of $575.37, 52-week low of $290.25. So it's had a pretty great year in terms of recovery, just like many companies during this crazy year. The PE ratio of 80.99. Now, this is really interesting because Netflix, again, Disney has acquired nearly a little less than half of all the Netflix subscribers in 1 year. Now, let's say in a couple years, Disney Plus reaches that, 240 million or something like that subscribers. That would be more subscribers than Netflix has. And in my opinion, if it's charging and keeps raising prices to the point where it's charging similar prices to Netflix, shouldn't, if we price it the same as Netflix, add on $200 billion to Disney's market cap? Not necessarily, but that is something to think about. Now, I want to look at this chart here. Here's a yearly chart. This is from a year ago to now. Now, remember, they added 80 million Disney Plus subscribers during this time. The stock went up 20%. That is not a huge increase for adding that many massive amount of subscribers, paid subscribers, to Disney's platform. Now, if we take that's 40% of Netflix's total subscribers. If we did 40% of the Netflix market cap, well, that's $88.636 billion that, in my opinion, should be added on to Disney if we price it the same as Netflix. Although most likely it will not be priced the same as Netflix, especially during these interesting times. But in the future, it really shows the potential that Disney stock and Disney as a company could share. Now, anyways, is Disney stock overvalued? Let's go back to that. Well, I do not believe so, especially they're just doing so many great things, adding tons of original content, slowly increasing prices once they get consumers hooked on it. This is a classic tech strategy that we've seen with Apple, that we've seen with Facebook, that we're starting to see with Google as well. You know, they're going to start charging for a couple different platforms, and now we're seeing this with Disney. They undercut all the other platforms. People start quitting their subscriptions there, move to Disney Plus, and then they start raising their prices. It's the typical corporate strategy here, and it's very effective. So anyways, guys, thanks for watching. Please subscribe. Let me know what you think of Disney stock on this huge move today. I had to make a video about this. I usually don't make 2 videos in a row, but I want to start producing a lot more content. Twitter.com/StockerFinance. Follow me over there. Going to be a lot more information and chit chat going on. Check out these videos as well. Patreon.com/StockerFinance. I do not have many Patreons, so if you want to support the show, that would help me a lot. Anyways, thank you guys, and I'll see you in the next video. Peace out.